Happy Monday, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Monday, the 22nd of January, 2018. Thanks for joining me for another Trader Bite, where we're just doing our prep together basically for 20 minutes. There's a lot more to it, of course, than what's in this video, but at least we get to walk through the process together and see how the market responds. And then review it, and then do it again tomorrow. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, a lot went on this weekend, of course, with the U.S. government shutdown. The market expected some sort of resolution on Friday. We rallied, we followed scenario one from Friday pretty closely, which was nice. Market's been behaving very well for the last 2 weeks or so. This is our first week with 5 days of trading, and we'll be on the schedule for a bit before the next holiday in February, and then we're clear through Memorial Day, the end of May. So the market stance this morning. What is the market stance? What is the allocation this morning? It looks to me like it's mostly flattish mixed. The 10 years and the bonds are hovering near zero, near flat, unchanged, unched. The NASDAQ is lower, down 3.25 points or 0.05%. The leader this morning is the British pound, up 0.4. Euro stocks 50, up 0.3. The euro up 0.16. The laggard today is the Dow, down 63 points. The Russell down 2.7. The dollar, as expected, taking a little bit of a hit. Now, I asked this question, I believe it was on Saturday night on Twitter. Well, what are your expectations for this government shutdown? The government was shut down as of Friday midnight. What are the expectations? And what I did is I went back and I looked at the last couple of shutdowns. Now, it's been a long time since we've had a U.S. government shutdown with the same party controlling the executive branch as well as the legislative branch, meaning we have a Republican president, a Republican majority Senate, and a Republican majority Congress or House, and we have a shutdown. That's very unusual. The last couple of big shutdowns occurred in 2013 with Obama, where it was a Democratic president and Republican Congress. It happened twice with Obama. I think the last one was like 21 days, which is a lot. So you look at how the market responded then, just use the SPX for that, the cash index. And then before that, it was Obama again. And then before that, it was Clinton, which again is a Democratic president and a Republican Congress. And net, looking at what has occurred the last couple of times, and it's not a big enough sample size, and I'm spending some time to talk about this because this problem is not solved. We still have a government that is dysfunctional somewhat, as they have carried forward this issue of having a government shutdown into this week. So we're looking at something that's likely to influence the trade and potentially bring in some volatility. We're looking for an impact on the U.S. Treasuries as well as the U.S. dollar, which we've seen a little bit. But historically, what's happened is the market has gapped down and come back to trade in line the same session or within a couple of sessions. The overall impact of a government shutdown is neutral or zero. Yesterday, we gapped down about 10 points, and we're trading in the S&P, and we're trading at 2809.50. We closed at 2811 and a quarter, so we're very close to unchanged. We're down 1.5 points, and it's the expected response. As this thing gets resolved, and there's a lot of pressure to do that. Remember, the all control rests with the Republican Party, so it's really up to them to sort it out within their own party. They have the power to do it. I expect it to be fairly quickly resolved, and then I'm looking for new all-time highs when that gets done. So that's just a little bit of background over what is likely to take place this week, or my expectations at least. Other than that, looking down the line at the week as far as what we're expecting. Today, the calendar's pretty clear. Tomorrow, we do have some key European releases. The ZOO survey in Germany, as well as consumer confidence in the Eurozone, and we have Fed's Evans. Wednesday, we have quite a few releases. I invite you to just find a good calendar and look those up. I'm not going to go through them. Thursday is quite busy as well as Friday. So Wednesday, Thursday, Friday, we have a bunch of economic releases. But today, quite quiet. Struggling to find that word. So that's what we have. Anyway, so I'll leave you with that. Let's take a look and review what we looked for on Friday. So Friday's plan, you could see here Friday, we have a point of control that's yes, I agree. It is a 60. They need 60 votes out of 100, which means they need 10 Democrats or a little under 10 Democrats to move over. But what I'm saying is, this is solvable, right? To put a lot of people's salaries and jobs at risk who work for the government, to shut them down and furlough people. In any case, I'm not happy with either party. I'm not a partisan. I'm not going to get into politics here, but for me, as far as I'm concerned, it creates a trade opportunity, and that's what I care about. But overall, I'm not happy with either one. They're all BSers. So Friday, let's look at what we got. Friday, we ended up with a very balanced profile, or Thursday, we ended up with a very balanced profile. With the mid, VWAP, and point of control right on top of each other at the century figure 2800. And then what ended up happening is Friday morning during the trader bite, as you see here, this yellow line right there, that's the last print. We are opening right on top of that. So we had a very, very balanced profile, and then carrying forward what happened in the overnight session, the expectation is for relatively wide opening swings, and then a dip before we get an impulse up, right? Before we get an impulse up, and to test out the 2807.75, we expect it to push through there, the all-time high, and then break through for a target that I circled here, for a target of 2813.50. I posted this trade because one of the things that I don't want to have happen here is for all of this to be theory. Like you can go online and find a whole bunch. Now there are more and more people making videos, some morning videos and pre-market videos and stuff. And not so when I started about 4 years ago, which is good. That's the point of what I'm doing, is to provide, to promote better information. However, when you go back and look, it's really important to explain how this is traded, as opposed to talking about the theory of what's expected and not reviewing it. This is why I'm spending a lot of time every morning on the review, because we want to see how it responded and pick up that information and add it to the context. I'm very blabbery this morning. So that was the primary hypothesis. Worked out pretty good. The all-time high was pushed to 28.15. So we pushed through this double measured move at 28.13.50, which was my extended target. Pushed to 28.15 and then started to roll over a little bit. The secondary scenario was for the market to try for that overnight high and then fall off and then start to test lower for a double distribution profile, which didn't happen. Here's what the market looked like. Okay. And here's what I posted about it. Oh man, I lost my post. So I'm looking for the post that shows the image of what I did on this, so we can tie those two together. I apologize, this was prepared, but I think I closed that particular page. So let me, here we go. So this is what I did. So here's what actually happened. Okay. Oh, too far. By 32. This is Friday. This is the open on Friday. You could see the market swinging both ways and not really directional open auction. And as we go through here, we see we put in the opening swing low at 28.05, opening swing high 28.0775. And then we get this pretty good response down 5.5 points from mid. We extend the opening swing lower. So now we're looking at potentially, still scenario 1 is in play. Potentially a continuation would give us scenario number 2. But scenario 1 is still in play. Remember, scenario 1 looked like this. All right, see this drop right here? Right there. Looking for a drop to value low from the prior day, which was at 97. Okay. So we drop down to 2800, unable to get below 2800, and we get to mid, and then we consolidate. To me, this is a decent place to play scenario 1, to take a risk on scenario 1, to play that probability. I'll show you how that worked out. And then now I'm looking for, now that we're back into the opening swing above the mid, pull back to the mid. See that pull back to the mid there? Now I'm looking for this local double top to be busted and to push through. Okay. Messy. Gets down to 99.5. And then finally, we end up with the large rotation. This is a second standard deviation rotation. So now the buyers are in control, right? And we are looking for the market to just continue to break higher. So we've got a neutral day, and we ended up with a neutral extreme, almost a neutral extreme. We're out of value on the top side. We tested below the IB range extension down, then we tested above, and then we're finishing in the upper quartile. This actually doesn't sit as neutral extreme. Neutral extreme finishes upwards and in the upper quartile of the range. This is in the upper quartile almost, but it's not finishing to the strong side. We expect it to extend higher under neutral extreme. Neutral extreme is a very, very strong indication of continuation in the direction of the close after the extreme's been put in. And so this is how we ended up. This is what I posted. Let's see if we can open this a little bit bigger. There we go. Hopefully you can see this a little bit. So there it is, triggered at 9:16, a little bit before 9:16 or so. And looking for initial scale out. This is what I've talked about a lot in my webinars on Futures.io and on Bookmaps webinars and so on. I'm always looking for that scale out, looking for my theoretical average, which is this yellow line right here, to drop away. I'm long, so I'm looking for this line to drop quickly. The market sits forever here. Is not able to take off yet, and then we finally get that 6-point rotation. So I end up lightening up twice there and there, and finally get the true scale out, which is right at the open, and that drops my theoretical average dramatically down to 27.94 1/4. And I'm looking for the next. I hadn't gotten filled here. I got filled on the back end. I was way in the back of the line when I took the shot, but hadn't gotten filled yet. And then finally I get the fill for another 5 points, and then it just continues higher into 28.13, which I didn't participate in. So that's the scenario one actually executed. Okay, and so that's the review. Let's move past this. As far as what we've done, this is the daily. This is Bitcoin. Where the heck? Okay, here it is. As far as what we've done since then, we've gapped down. There's the gap, 28.04 from 28.11. So it's actually 7 points in a gap. We've been completely balanced in the overnight session. We've been fiddling around with the point of control and the value area throughout the session. We broke higher just now to push the 28.12, but we're pulling back quite deeply. The market's non-directional at the moment, and so the market really isn't giving us a good indication in the overnight as to what it wants to do. 130,000 traded. 130,000 traded this morning. That is pretty much in line with what we would call normal, or the most common range. And so there's nothing we can glean from this from the overnight session. So what we're coming into today's session with, and this is where we go into carrying it forward. What we're coming into today's session with is a market that is non-directional, market that is waiting for news. So this morning, open auction. I'm looking for the market to be responsive. The inventory is almost 100% short or lower. So I'm looking for it to be listless or kind of drifting everywhere. I'm looking for a break higher, but I'm looking for both sides to be resisted. I'm looking for the point of control to be tested at some point. I'm going to look to get short early. Okay, I'm going to be trading from the outside in this morning. Again, looking for a break early. I'm looking for it to get down to the point of control, value low, and to trade somewhere in the middle, unless there's news. Okay, unless this shutdown is resolved, we're not likely to see much of a direction. We put in a new all-time high on Friday. We may rest a little bit, but this morning I'm not expecting a lot of direction, and there isn't anything in the calendar that's likely to push us over the line. That's the expectation. Okay, so that's the primary expectation. If we do break lower quickly this morning, we may develop a pretty good base from which to have an extended move, an impulse move higher. Okay, which then would bring us up into the higher volume node at 28.12, and then a continuation for a small break of the all-time high, probably 1.5 to 2 points tops. That's the secondary hypothesis scenario. This scenario is looking for how does it fail, what's the quality of the move lower, and then for it to bounce, try hard to hit the bid. We're seeing that now on Bookmap. Let me show you. We're seeing that now here. You see this movement down, while it gets brighter, while it gets more and more orange. Remember, the range of color is the bigger the number, the more to the right, the more orange it becomes. The smaller the bid ask, the darker it gets, the more blue all the way to black it gets. And so what we have here is this kind of scenario, but I'm looking for this on the open where the market moves lower, but the market comes in and provides strong support. Okay, in that scenario, I'm looking for a long for the break higher on scenario number 2. Okay, then I know my targets are 28.12, 28.15 is the extended target, and then it's likely to push through by about a point to 2 points before it rests. So this is a long scenario, a directional long scenario. The other scenario, scenario 1, is non-directional outside in trading. I know that's a lot of information. It's probably not a good idea for me to get into the political crap. It's just very frustrating to see how things are run, but that should set you up with the morning. Pay attention to the news. A lot could come out that could push things around if the situation deteriorates here. Remember, not 100% of the U.S. government's closed, but it does put at risk the currency and our debt as this stuff is being resolved, right? Good luck today, and I'll catch you tomorrow morning. Take care.